We're going to take a look at the next case, which is the anonymous caller, recognizing it's a fraud and evaluating what to do. It's case 3.3 in this section. So let me go ahead and pull that up here on the screen for you. Wherever it is. There it is. Hopefully I'm sharing that. There we go. A little bit larger. Really interesting case here that sort of ties into what we've been looking at. I know you probably think, well, Fadley's talking about fraud again, and is it that prevalent in companies? And the answer is yes, unless you've got good internal controls and a good segregation of duties among a lot of people. Because there's two things that, and we don't really get into auditing in this course, two things that are so important is segregation of duties, meaning you've got a lot of people involved to make sure things are being done correctly. You know, one of the companies I work for that is a really small company, $7 million in revenue. We only had 48 employees, but the person requisitioning, the person approving a requisition, which would be a purchase order, the processing of that purchase order, the receipt of the goods of what you're buying or verifying what's being, services being rendered, the actual invoice, we're up to 4 people now, being processed, the generation of the check, the review of the check, that's to be another, that'd be a 5th, including all the supporting documentation for the check. Whoever signs the check would be 6. Bank reconciliation at some point. Had like 7 people involved, so it's about impossible to for someone to cheat and do something as far as a fictitious entry to pay themselves or what have you. You know, I put out there a bookkeeper theft link. Let me just go ahead and pull that up here before we get into this case. Maybe you can see that. Yeah. If you go out there and click on that and read this, this person that worked for a bank apparently had paid back $321,000, maybe because it was a federal crime what they had taken place, and there is no parole in the federal system. But if you go down through here and read all of this, which you should, talks about some of the things that this person did in order to cheat, wherever it was. Yeah, look at this in August 2017. It's a couple of years before this, in 2019, when she was convicted. She began creating fraudulent checks without authorization, right? There should always be authorization, supporting documentation. She used several methods to hide her scheme, including removing pages of monthly bank account statement, right? When a bank account statement comes in, that should go to someone who's not even involved in the whole accounts payable purchasing process, purchase to payables. And what has taken place here is she's removed some of those pages, probably the ones that had the canceled checks on them because it would have her signature, right? She's removed those. And to hide what has taken place of what she did in QuickBooks. She went out there and changed the payee field in QuickBooks. Even though the checks are written to her, she entered them into QuickBooks because she was recording these entries. She's getting the bank statement. I mean, she's doing all of this, and there's no segregation of functions with her. And so she's able to change the payee field. In fact, I saw a very similar problem here about 30 years ago in my church, where the treasurer at the church was doing something very similar, writing checks to themselves and then changing who was actually paid to in QuickBooks. And of course, when the bank statement comes in, if only one person sees that as a person is cheating, it's easy to get away with it. So she got away with it for a long time, didn't she? But she was eventually found out. All right, let me go back to this case, but I thought you'd find that interesting to read. Let me try that share again. Well, where did it go? There it is. All right, so now we're back to this anonymous caller, recognizing it's fraud and evaluating what to do. Now, this kind of goes along with maybe what was going on with WorldCom, and we looked at in that first case. This is the third case that I've assigned to you. And this one is a little bit longer to read, but it's very interesting. And it starts down here with the objectives, learning about real world pressure for meeting financial expectations. What's the difference distinguishing between fraud and aggressive accounting? Sometimes it's a real gray area, right? You're going to be aggressive because there's a lot of leeway oftentimes with what you assume is what your principles are in accounting. Now, GAAP is GAAP, right? But there's always questions on how you want to treat certain aspects of your interpretation of the standards. What's potential alternative actions? Now, this person that's involved as a controller, which is similar to what I would have done for many years. I know probably very few of you are going to be controllers, maybe a handful, probably out of 80 students, maybe 5 are going to be financial executives at some point, maybe more, you never know. So this applies not just to controller. Think about it in terms of yourself as a general manager and knowing more about what's going on in the financial function. And develop arguments to resist or prevent inappropriate accounting techniques. Now, there's several questions at the end of this, a lot more than the first 2 cases, which had 2. Paper's still supposed to be 5 pages, which is minimum 1,500 words. So you may be going over on this one to fully answer the questions. But that's the minimum. 1,500 is not the target. 1,500 is the minimum words. All right, so what's happened here? This person, a former student, is now the controller. They've called their old professor, Dr. Mitchell, to tell him about what's taking place in this company that he's working for, or she's working for. I guess it's a he. Been there 3.5 months, right there. Not been there long. It said Friday last week, the company's chief executive officer met with representatives of the bank that's funding this line of credit, right? And the bank wants to have audited financial statements. Yes, and they have external auditors involved in this. And that's when this controller that's been there 3.5 months, they came in during that closing process. So they have audited financial statements. But this is what's taking place in the first quarter of this new year, and they're unaudited statements. And you still have your public accounting firm out there to assist you with questions and so forth and concerns. But here, things have taken place since the last set of audited statements. And it's probably going to be another 9 months before they have another set of audited statements. But what's taking place here is this controller knows that the sales, right, nothing new there, sales have been overstated. Well, if the sales are overstated, receivables are going to have to be overstated. And double entry accounting says what? Double entry accounting, you got to have a debit and credit that is equal. And if you don't, then it's not double entry accounting. So they've overstated sales and receivables. And so this controller has vehemently refused to sign the commitment letter required by the bank because of my concerns about the inclusion of sales transactions to customers on account that I knew did not meet revenue recognition criteria. See how this ties into the first case? All right. And like someone had in one of their papers, 61% of fraud is fraud. 61% of the fraud cases are related to revenue recognition. All right, so that's their concern. I'm not going to read all the way through this, but I'm going to point out the key parts. One of the parts up here that I did skip over is the fact that this is a privately held small startup company. It's not publicly traded, but if you're getting a loan from a bank and the bank wants audited statements, you have to follow certain internal control and financial reporting standards. That's what the bank expects, or they're not going to loan you money. And so they're pencil whipping, like that term, they're pencil whipping the books in order to get this line of credit for the funding, because they say we're not going to make it if we don't. Well, it is what it is. You can't cheat to make things look better than they are. And like what usually happens when you have CEOs that are, and maybe here even the CFO and COO, Chief Operating Officers. Look what they've done to the controller. They accused me of living in an ivory tower and emphasized that companies book these kinds of transactions all the time. Well, that's not true. And so they're trying to make this person, they're trying to intimidate them into doing this, and probably make this person feel like they're going to get fired if they don't concur with what they're trying to do. I've seen this far too often. It's more common, more prevalent than you think. It says over the weekend, I'm more convinced this is clearly fraud. They've been arm twisting my accounting staff, right? And big sales transactions before the sales occur. Right there. Same thing. Matter of fact, goods have what? Haven't placed any kind of orders for our company, and no goods have been shipped to them. That's why I had that conversation with you a couple of weeks ago about free on board destination, free on board shipping, about title passage and the importance of that if you're a manufacturer. 5-step process for revenue recognition from 2018. Throwing out all kinds of good stuff here. Great case. But this controller was out and instructed the accounts payable clerk. The accounts payable clerks, they don't know anything about making journal entries. It's a clerical position. In fact, this particular person you continue to read on is actually in school taking accounting classes right now, probably trying to get their accounting degree. And says the CEO had handwritten on a piece of paper. I guess that's better than a napkin, but obviously it was a bunch of phony transactions that they wanted this accounts payable to enter. Well, another part of audit is you should have authorization. And authorization should be from qualified people in positions making these transactions, not an accounts payable clerk. Because again, accounts payable should not be, what's accounts payable know about accounts receivable and revenue? That's completely, unless it's a really, really small company, that's completely out of their area of expertise. So there are all kinds of red flags going on through here. Says this person that's in accounts payable says they're currently taking auditing courses, and where financial statement fraud is the topic, was uncomfortable with what had transpired. And so he's told the controller about this, and what's just further galvanizes the fact that there's other people in the department besides the controller that knows this isn't right. Usually the lowest level are the ones that are going to speak the loudest. So continuing on down here to the bottom of that page, talking about that the books have been closed for the prior year, auditors are involved. And it's good that they've got external auditors, because that's the people you should go to talk about things like this. You know, I know they don't want to jeopardize what's going to happen with their audit opinion, but it is what it is. I mean, at some point, well, let's just read the questions. Down here at the bottom. What would you recommend to caller if you were Dr. Mitchell? What are the risks of continuing to work with the company? So if you're the person giving out advice, like the professor here, if you were me, what would you recommend to the caller? What's the risk? And some of these are rhetorical questions, but because just in general, in total, you don't have to answer these individually. I mean, you are, but not answering the first part of question one and then the second part. What's your answer to the first question? What are the risks in continuing to work for the company? And you just turn your notice in and leave. What's the risk of resigning immediately? Should you contact the State Board of Accountancy for a source of advice? That would be in Tennessee, TSCPA, Tennessee Society of Certified Public Accounts. They have a website. There might be something on there about blowing a whistle. You go out there and look into it. But this is a whistleblower. Somebody made that comment on our first case, Whistleblower Act, that you're protected on things like this. Usually it's publicly traded. I'm not sure about a privately held company, but there can't be retaliation against somebody. That came out of the Enron incident. There can't be retaliation against someone who blows a whistle. You know, at Exide, we filed Chapter 11 back in 2002. And part of that, coming out of the bankruptcy, we set up what was called a fraud line. We were required to do that. I think that's probably part of Sarbanes-Oxley. I'm not sure, and I think it is, that you have to have a 1-800 number that any employee can call if they see something going on that's fraudulent or they think might be fraudulent. And that 1-800 numbers to not to that company, it goes to a third party that's going to look into it to maintain that independence, right? Segregation, again, a key term in audit. Unfortunately, I know the 800 number in our Bristol plant a lot of times turned into a gripe number. If somebody didn't like something their supervisor did to them, or it's usually a bunch of stuff that had nothing to do with fraud. There was never any fraud calls to my knowledge, but that's what companies do. And I probably help companies like this. May or may not be required to do that, but you can look that up and you can tell me about it. By resigning immediately, you just say, I don't want to be part of this. I know that's what some people might say, and look for a job elsewhere. Or if you believe you can exert a positive influence on the situation, you stay there. And oftentimes, if you're married with kids and got a mortgage and all that, you can't just quit out of your sense of principles, as you might say, and go try to find another job. Stay where you are and do what you know is the right thing to do, exert a positive influence and let the chips fall where they may. I mean, that would be my response, but it doesn't have to be that. The second question there, what responsibility does the caller have to report this situation directly to the bank involved? Good question. What's the risk if the caller does inform the bank? Turns out the caller's assessment, what if the controller's wrong? What if it's not as bad as you think? Which I don't think is the issue here from what you've read. Sounds pretty bad. Somebody brings you a handwritten piece of paper and tells the accounts payable clerk to enter it. That second part's probably it's not accurate. There is a problem. What other parties should be notified? What about your auditors, your external auditors? All right, you think situations like this, aggressive accounting or even financial statement fraud are common in practice? You can do some research on that. How often is that? Obviously it is, or I wouldn't be talking about it here in an MBA class. But it's very important for most of you, 95% of you taking this class are going to be in positions where you think about potentially doing something like this because someone else mentions it and that's common business practice. Well, it's not. So you need to be aware of the personal, career implications of doing something that's fraudulent, especially when your accountants tell you that it's not right. How can you tell if it's aggressive reporting or in the guidelines of GAAP? How do you tell? And one of the principles, guidelines, is consistency. If a company's constantly changing from one principle to another, like from LIFO to FIFO on inventory valuation or some standard costing, or if they're changing depreciation methods, if they're constantly going back and forth trying to manipulate earnings, and they won't call it that, they'll call it smoothie earnings. That's not just aggressive accounting, that's fraudulent behavior, misleading people, misleading your shareholders, misleading the bank or creditor. They're loaning you money. You have to be honest with people who are loaning you money. It's just the right thing to do. It's unethical. What pressures or factors will executives use to encourage accounting managers and staff to go along? Look at number 5. 3 conditions are generally present for fraud to occur. First, the person perpetrating fraud has an incentive, right? Maybe they're getting a bonus. Maybe under these stock option plans or whatever it might be, they're being rewarded on income, or anything that they can do to make their stock price go up under stock options is going to be money in their pocket when they exercise those options. Is there incentive? Is there an opportunity for the person to carry out the fraud? Do they have the ability to do something fraudulent? If you got a lot of people involved, like I gave you that purchase to payable cycle of requisitions, purchase orders, the receipt of the goods, the invoice, generating a check, signing a check, and bank reconciliation, those 7 things, you got 7 different people doing it, you're not going to be able to cheat the system. It's just not going to happen. Same way with generating revenue. Revenue should have what? Clear sales orders. You know, you got purchase orders on the payable side, but on the sales side, you got sales orders. Is there a bona fide sales order And then when was the performance obligation met? When did the title pass of what it is you're making or services being rendered? When does that actually occur? And of course, that accounts receivable has to go up. If it's double entry accounting, you can't just book credits to revenue without a corresponding debit. You know you don't have cash. So if you set up accounts receivable, why you don't get that accounts receivable off your books? You're gonna write it off later as a bad debt expense. So opportunity. And then the third one is what's the person's attitude or ethical values? Allows the perpetrator to rationalize unethical behavior. So important. You can rationalize or justify anything in your life. People who cheat at a bank probably think, here I am making $11 an hour as a teller or whatever position I might have. Maybe it's $20 an hour as some manager in the bank that has the opportunity and have an attitude, well, they underpay me, they don't pay me what I'm worth, so there's nothing wrong with me taking a little bit extra here. I mean, church treasurer's not paid, or some nonprofit they underpay all their accounting staff, mainly because they don't understand accounting. It's like a necessary evil. And so accountants will justify or rationalize in their mind why it's okay to do something. That's the most dangerous part. So those are three factors this case points out, which is very good to remember: incentive, opportunity, and attitude. And then number 6, Securities Exchange, they issued a Bulletin 101 revenue recognition in financial statements. That's probably outdated. I'm not sure when this case was written. SAB 101, you know, the revenue recognition is 2018, the 5-step process. You need to Google on that, and most of you did that on that first case. And you don't have to spend a lot of time on that, but if you want to touch on it, you can. And then finally, number 7, which financial statement assertion related to sales did management violate when it issued the falsified financial statements? What type of audit procedures could an external auditor perform that might help the auditor detect this fraudulent activity? I would ignore number 7 and just stop at 6. So just ignore number 7. It'd be a good way to see if people actually read or listen to this video, right? Since some probably don't. So if somebody answers number 7, then. But as far as your format, if you want to format this somehow, don't restate the questions. But in general, if you want to state what each of these 6 questions are, just a generality, like a subheading in your paper, like 6, period, revenue recognition, and then talk about that here, you can. Instead of trying to group all this together in some form, might be easier, especially since there's 6 questions and not 2. But be sure and hit on all of that. Shouldn't have any trouble reaching 1,500 words. All right. I heard a few of you said, well, I just can't get to 1,500 words. Well, you search more and you'll find all kinds of things out there. Some of you did a super job on that first paper. So, all right. That is it for the anonymous caller, recognizing it's a fraud and evaluating what to do. All right.